Good morning, everybody, and welcome to the Daily Energy Markets podcast. It is the last day of May, the 31st of May, and we got Brent crude oil softening at 81.82, the last day of trading before the OPEC Plus meeting in a virtual meeting, as it's now turning out to be. And Kate Durian, Mies contributing editor and non-resident fellow at the Arab Gulf States Institute of Washington. I'm going to kick off with you, Kate, because I think you've been to about 100 plus OPEC meetings, and that's not a reflection on your age, but more a reflection on how many meetings they've had during your tenure. They've met a lot more often than they used to in the old days, but ultimately, I can't remember in my years, which is not a short period, 25 years or so covering this OPEC group, that we've gone into such a major meeting with so little sort of pre-meeting noise, pre-meeting leaks, and so forth. Something to stop creeping out overnight. But your thoughts, the last trading day ahead of this OPEC Plus meeting, is there a surprise in the kitchen?
I don't think so. And Reuters seems to have had some leak. I actually started my energy career at Reuters, so they claim to have had, three sources telling them that they are cooking something, but it won't really happen until 2025 because they have to look at these baselines. I don't think anything will happen. If anything's going to happen, it won't be until the fourth quarter. I think they'll wait for the US election. They'll wait to see proof of this reports from the IMF that Chinese demand is actually, has been revised up to 5%. I think they'll wait to see what happens with interest rates. I think there's a lot of uncertainties at the moment. And, even with that leaked report, which is everywhere, the Reuters report saying they're working on some formula where they will keep the voluntary cuts in until 2025. And of course, there is a can of worms, which is the new baselines that they have to negotiate. And don't forget, they're doing it online this time. So there is no chance to actually grab one of the delegates and find out what's going on. So it's going to be a difficult one. And yeah, as everybody said, and I think you've talked about this in your other podcast, Prince Abdulaziz bin Salman likes to spring surprises. And so nobody really knows. If anything, it'll be some kind of formula that we're all going to be scratching our heads and saying, are they cutting? How much are they cutting? It's like the 2.2 million was not really 2.2 million because it included voluntary cuts that the Saudis had committed to already. So it was much less. And don't forget, some of these members can't really produce what they can. I think one of the biggest problems is going to be how to deal with the UAE. The UAE's quota is far too low compared to what they say is their production capacity, which is 4.85 now, very quietly on their website. So I think that's one of the issues that they might stumble on, because the UAE is going to say, we're not going to be sitting on
That
more
seems
than
like
a
lot of pretty tricky things to navigate over Zoom. The Dr. Aman Nasri, Managing Director, Middle East at FGE Dubai. Dr. Aman, if OPEC Plus simply does what they did last time in March, which was agree to roll over their existing sort of supply profile or cuts profile for one quarter, in that case in March it was for Q2, if they simply do the same again for Q3, will oil prices rise or fall on that rollover, do you think? $80 Brent looks vulnerable to me at the moment.
No, I don't expect the prices to fall. I think we may, depending on
but you have to add the word there. You don't expect them to keep falling because they've been falling.
Yeah, no, I wanted
April
to say that they
5th.
will stay.
They've been falling consistently since April 5th, right? We're down about
$12,
$13.
Definitely. No, we have been in a low kind of demand in terms of growth quarter and season first half. We have also had, in terms of year on year, last year we had a strong growth in second quarter, so year on year was weak in second quarter. Fundamentals were weak because of the closure of Bab el Mandab. We had some huge amount of delayed oil that hit land basically, and showed a sizable increase in on land inventories. So all of those definitely put downward pressure on the prices. We had some geopolitics that kind of got market a bit excited, but by lack of significant impact on these fundamentals, the pull down was bigger than the jump. So all of these basically contributed to a trend that you said. But we have seen the prices kind of staying in hovering range bound about $80 to $85 up and down. And I think we're at the bottom of it. And looking forward, I am talking about the same scenario that you mentioned. That if they roll over, we're seeing the third quarter seasonal demand picking up, and if they keep the cuts in place, call on OPEC is going to be higher. We're going to see the inventories start to draw, and everything will point towards tighter market as we move into probably June. May still be tricky, and we still may not see as any significant change in prices, but we expect to see towards the end of the June and maybe into July to see prices start to creep up towards 85 and higher. And then we have 4Q, which is also seasonally high demand, and call on OPEC remains
Let
high.
me just there's ands and ands and ands. We have to at least cut off on one hand.
Yes. Sure.
The Mehmet Oguchu, Group CEO, Global Resources Partnership Chairman of the London Energy Club. Mehmet, is there an and geopolitics? I mean, a man didn't mention that, but ultimately, have we forgotten? We've got overnight the president of the U.S. giving permission to Ukraine to use their American weapons to project into Russia directly. We've got Israel deep into Rafah, which the U.S. had told them not to do, and now seem to be accepting. Are we ignoring these very large geopolitical crises? Are we just getting used to them? Are they the new normal? And the fact that they're not putting a premium in the oil price. Your thoughts on where that big two geopolitical cracks are impacting or could impact the energy markets going forward into the third quarter?
Well, no matter how strongly we say it's geopolitics stupid, echoing what Clinton in the past said, it is economy stupid. Still, the markets resisting the geopolitical pressures. They already, as you say, probably got accustomed to it, and all the serious clashes, flashpoints, still not affecting the market as they would, let's say, 5 years ago. So on the one hand, OPEC Plus will never allow the oil prices to go down $80 threshold, in my opinion. So they will do whatever possible. And this rollover of 2.2 voluntary cuts will continue to the end of the year, in my opinion. And there are some member countries like UAE and Iraq, they want to increase the production for obvious reasons. And then what will happen to Russia is a question mark as well, because it looks as though that, since we speculated a couple of weeks before, Russia will be intensifying its warfare in Ukraine. So it's not going to stop. We saw that they already attacked. And then, as you said, US president gave the green light to use US weapons in a restricted area against Russia. And then the Chinese got involved in the Rafah operations and how to stop the Israeli attack and perhaps broker a ceasefire. So it's getting quite complicated in Gaza.
I mean, just on that point,
Russia, Ukraine,
Mehmet,
just God knows where else.
Mehmet, I just wanted to follow up. Obviously, we've had a meeting in China the last few days, the Chinese hosting the Gulf Arab countries there, which is now becoming a sort of an annual meeting as such. And the Chinese did, as you say, make some commentary regarding immediate ceasefire and so forth. But do you expect the Chinese to sort of use any of their muscle, their geopolitical muscle, to bring some kind of end or outcome to this terrible trauma in Gaza?
Well, as we see, the Americans have no leverage on Israel now, despite all their objections. Tel Aviv is continuing its attacks on Rafah, and any other Arab countries, even using the leverage of Abraham Accords, couldn't do anything. Turkey couldn't do anything. So now China had to step in. They are under pressure from their partners in the Gulf, in the Middle East. And also, I think it's a humanitarian crisis, which will be affecting everybody. And Chinese, of course, are not acting out of their emotional breakout. But what they are trying to do is that whatever happens in the region will destabilize it if it's not contained. Therefore, one of the Chinese strategic objectives is to make sure that the region is stable so that its business can continue. With UAE, their trade, non-oil trade, reached almost $73 billion. And the same goes with Saudi Arabia, Qatar, and other Gulf nations. They are also very active in Iraq, as we know, in oil and gas. And therefore, they don't want the region to be disrupted because of what's happening in Gaza and the further Israeli attacks. That's the reason why they had to step in for diplomatic and self-interest.
Well, it'll certainly be interesting to see if that
I don't know whether they are going to succeed in it, but the relations between Israel and China are at excellent level. Israel has leverage in China. China has leverage on Israel. Therefore, perhaps as an additional pressure brought on Netanyahu might soften the position. Who knows? But it's important that China finally decided to step in.
Yes. Kate, what?
Can I say something on that? I think
Yes.
talk is cheap. I think China's looking more into its backyard. It's looking at Taiwan. It's looking at the China. I don't think that it's all talk. I mean, they haven't done anything, and if Washington can't have any influence on Netanyahu, I don't think China can. I don't think anyone can, frankly. When you turn a blind eye. So, the whole Russia thing it's all a game. It's like, we'll allow you to use our weapons, but don't hit the refineries. Don't hit the ports because we want to keep that oil for. I mean, and the so-called Iranian attack on Israel, which was sort of paper tiger. So I think talk is cheap. Anyway, but I'll answer the question. Ask me your question. Sorry.
No, well, speaking of that, in that sense that there is no resolution, there's no power. I mean, there's talk is cheap, but nobody's willing to put much muscle behind that talk, and so consequently, this crisis trudges on. The point I wanted to put to you, Kate, regarding OPEC and the idea that it faces this decision around the ultimately the biggest question, which is not the immediate, but is the revised baseline of production quotas. We lost Angola the last time this conversation came to the fore last November. And there was a bit of pressure to bring those two things into alignment, actual capabilities and quotas. Your thoughts on the fragility of OPEC to force to sort of have this difficult conversation? Are there others that could fall off the tree as this sort of becomes a little bit more robust in bringing into alignment quotas and actual production? Are OPEC going into a vulnerable period with this discussion?
Yeah, I recently looked at these scenarios. Would OPEC Plus survive, particularly the energy transition? This sort of phasing out of fossil fuels. But I don't think it'll make a difference. I mean, you might lose a few of the smaller African producers. It won't really make much difference. I think so long as Saudi Arabia and Russia are on board and they seem to be committed to OPEC Plus. I mean, don't forget, Putin for him, OPEC Plus is a platform, right? He's isolated, but OPEC Plus is a platform for him where he can actually exert some influence on what happens to the global economy. He's still managing to export his oil. The other day I was looking at the dark fleet. I mean, it's huge, 10 to 12% of the total tanker fleet. So there are ways around it. Now, of course, if there is an election in November and you have Trump coming back in, despite his guilty verdict, which I don't think is going to land him in prison. This man, it would kill anybody else. It would be the death for anybody else, but not for him. We have a hurricane season coming up, which is apparently going to be quite strong. You have the election coming up, which might mean tighter sanctions on, or more. I mean, the sanctions there against Iran, there'll be more sanctions. There'll be more an effort to apply the sanctions more strictly. You might get more about. So I think it's very, very difficult to see how things are going. But on OPEC Plus, I think they're there to stay. They've survived wars between their members. But what I notice, and I look at all the media, the regional media, when was the last time you saw a conversation between Mohammed bin Zayed, the president of the UAE, and Mohammed bin Salman of Saudi Arabia? You don't. So that tells me, I mean, there's conversations going with Qatar, between Qatar and Saudi Arabia, between Oman and the UAE getting closer to each other, with Kuwait, but you don't see that much of a rapport between those two, the two biggest economies. And that really matters because the UAE has, let's not forget, they've had an issue over baselines in the past, which delayed an agreement and, prices actually responded. So I think if the UAE says our capacity is 4.85, so we should not be producing less than Iraq. I think that's going to be an issue. Their quota is far too low compared to what they say is their production capacity. And the IEA, don't forget, has them at much higher levels. They've got them above 3.3, I think. So that is going to cause a bit of a problem when they start discussing the baseline.
Well, it sounds like maybe what Reuters is hearing, I mean, is the beginning of that conversation. I mean, ultimately, you don't leave that scale of a conversation until the end of the year when you've got 3 minutes to midnight. Iman, I wanted to get your thoughts on where we go into this is a critical, as you said, tighter market in the Q3 with the US driving season being a big part of that. Lots of Americans get in their cars and drive as far as they can. Ultimately, the outlook for that, the stock draws on refined products, does that look like it will be tighter? Are the early signals positive?
Yeah, no, we definitely see it coming. A lot of that is seasonal, though. If you lay over the fundamentals, the balance and the stock draws in over historical years, it is slightly perhaps tighter. It will be if the cuts are rolled over in third quarter. And remember, this is all subjective and depending on your assumption on demand growth in major economies, as well as let's not forget output from non-OPEC plus, which is subjective to, in this case, for example, the hurricanes and the potential disruption in the US output, as well as some other outages that we have seen, a few of them in North Sea, and so on and so forth, and production, normal production or growth in the US shale. So all of that put together, yes, we do see third quarter balances in a relatively tight, but in the context of seasonal, still okay balance. We also
and on that point, Iman, I mean, you think going into this weekend that OPEC Plus will be happy to see, or will be tolerating that tightness and welcome it without meeting it with new supply, but that they'll let the tightness arrive so that it draws down on inventories rather than on new supply?
No, absolutely. I think I think they will be comfortable because of the nature and seasonality and the difference between what you call it a 5-year average of seasonality of balances and inventory draw in that let's say July, August, September timeframe, and even if you look at 2023 balances, the line, we're still not even as bad as it was last August in terms of market tightness. So I think it's tolerable. the more important factor is what to do with 4Q and what to do in 2025, which is the bigger problem here. And I believe I agree fully with everyone here. And Kate mentioned that they are going to roll over, but work out in the background what to do for and in 4Q, maybe towards the end after the elections. Maybe we see something in December popping in preparation for 2025 and all these baseline adjustments. The UAE and Iraq situation is critical. The UAE production to capacity ratio, no matter whose capacity you take it, I think 4.85 could be the top end, including condensate, and 4 to 4.1 is what our crude assumption, which if you divide that, it's more like 70-75%, which is the lowest among all nations. And Iraq is facing a big problem of incremental refining capacity or domestic offtake. And should they continue to overproduce and be non-compliant or cut exports? So again, these two countries are under increasing pressure, and we will definitely see a different equation coming. I
mean, as Kate mentioned earlier, and it's too big a topic for this platform, but ultimately, when you take all of those big, real structural challenges going forward, that OPEC Plus might be better off just in that sort of 6 to 8 countries that really matter agreement, rather than trying to shepherd 20 odd countries that don't. There's enough to be getting on with than trying to shepherd marginal countries. Mehmet, I wanted to get your thoughts again. Kate touched on it, but I didn't want to bite at that point, but I want to bite now. The former president of the United States has been convicted of a crime. He is now a felon. Does that matter? Your thoughts on its ramifications globally? In America, of course, it feeds into the national elections, and it's a bit of this, it's a bit of that. We'll see where it goes. But on a global level, here is the leading sort of poll ahead in the polls, next presidential candidate for the United States. How do you think that resonates globally?
Well, I mean, if you asked me a couple of weeks ago how the election will be resulted, like many other people, I would say an outright victory for Trump. But the recent soundings, public opinions, show that it's now head-to-head, more or less. And if the Trump indictment, and as we have seen yesterday, will affect the voters somehow. Legally, I don't think that there will be any trouble for Trump going forward to the election, but I think he will lose some ground at home and abroad. And plus, we know that if he comes to power, he will continue fighting with the establishment, be defense industry, be Republican establishment, media.
Well, I'm more curious as to...
Then I think it's going to...
Mehmet, I wanted to get just more focused in on... I mean, we've seen in recent months around the Israeli invasion of Gaza that the sort of moral standing of the West, let's just put it that in that sort of generic sense, that here is the world superpowers of the last 100 years or more, and their moral posture, which has always been a big part of their external engagement, has been eroded greatly by the slaughter in Gaza. And now you have a president who's been convicted of a crime. I'm just saying, from their weight in the world, does this matter? Does it impact? Where does all of this go, do you think, from a global diplomatic posture point of view?
Well, Sean, unfortunately, in global politics, still the power is more important than ethical values. Of course, the Americans lost moral ground. Most of the European countries lost the moral ground in the face of what's happening in Gaza, but still they persist on that. I was listening to Jimmy Carter a couple of weeks ago saying that unless we bow to Israeli pressure, most of the congressmen will not be re-elected. I think the same goes for the president as well. Therefore, neither Biden nor Trump will be pushing Israel to the limits. So when it comes to making a choice, as they have done during the Hamas attack, the US Navy lined up in front of Israel, giving the message to everybody that we will be standing behind Israel if you do anything wrong. And still, even if they don't approve what Netanyahu is doing, in the final analysis, whoever comes to power in Washington, whether they are morally right or wrong, I think they will still stand behind Israel in a very strong way. So it's not about the morality or ethical values in global politics. It's more Machiavellist approach, and still it's the real power that makes things continue the way they are. I'm not very optimistic about international public pressure on morality will be changing the U.S. policy or Western policy.
We're in the
way.
raw. We're moving into, or we're already in the sort of raw power dictates, and that's where it's at. Let's go to the survey question, and I want to get each of you after the survey question to give us your forecast for the OPEC meeting. No, maybe this and maybe that. What are they going to do? You're on the line for your call on the OPEC meeting. My question is, or not my question, ultimately, Brent crude oil prices will drop below $80 a barrel if OPEC agree to roll over cuts for only the third quarter. If they just do what they did in March, I think this oil price continues to fall. That a rollover for 3 months will not stop the downward draft we've seen for the last 2 months since the peak of $94 in early April. That's my thesis. Agree or disagree with it? Obviously, that's the question. Brent crude oil prices will drop below 80 if OPEC just simply rolls over for 3 months. Agree or disagree? Kate Durian, you're first up. Ladies first, as they say. Your call of what will OPEC do this weekend?
Well, listen, I mean, usually doesn't the market move on the rumor? I mean, we've had this Reuters story about this thing they're cooking, and the market is we're under 82. So I think I don't think prices are going to move that much unless they come up with a big surprise. But it's no, I think it's more of the same. You know, if their own
more of the same for 3 months or more of the same for 6?
I think more of the same for probably for the rest of the year. But don't forget, OPEC's own demand forecast is much higher than anybody else's. It's like 2.25 or something million. So, you know, where is the, are they working on the basis of their own analysis? Because it's OPEC plus now, right? They've changed the formula. So, you know, if we're talking 2.25, then, you know, it should be time to increase production because we are getting into this season, the driving season, and more people are driving because they're afraid to fly now. There you go.
Iman Nassery, your thoughts, putting you on the spot, what do you think OPEC Plus will do on Sunday?
Well, our assumption and my take is that they will roll over for next quarter. And at some point in 4Q, we expect to see an incremental volume. What size and how much? Definitely not all of it, but maybe part of it, and maybe in 2 tranches. But that's our base case. Obviously, as Kate mentioned, and I reminded everyone earlier, that it's subjective to their assumption on fundamentals and what comes underlying assumptions on the baselines, which could also contribute to what's going to come. But for third quarter rollover, and as I mentioned, prices will linger around the current 80 to 85 dollar range for maybe another month before we start to creep up towards 85 and higher in late third quarter.
Okay. Mehmet, last word with you as we get the survey results. Your thoughts on what OPEC will do when they meet on Sunday?
Well, as everybody predicted, I think we are going to see a rollover because on a virtual meeting on the Zoom, we don't expect ministers to negotiate hard. Therefore, I think rollover will continue to the end of the year. But if the price continues to fall, as you say, below 80, I think they will come back again to review this decision. Extraordinary meeting of OPEC Plus might take place. I don't think that they would allow it to go below $80 because this is going to create serious problems for many OPEC Plus countries. And also don't forget that geopolitical tensions, although we discount them right now because of the market reaction, and they might become more serious than they are today because, as we said, Russia will be continuing its attack on Ukraine. Russia might be trying to bring also some of the European countries into the play. And then what's happening in Gaza, involvement of other countries in the region, in the perhaps Strait of Hormuz. So there are so many other factors that might come to play unexpectedly. Therefore, I believe that $80 will be the threshold. And if it goes below that, there will be many other factors coming into picture. US elections, of course, in November is very important. Biden will try to keep the prices down, although US companies would like to have higher prices perhaps, but the administration would like to keep the prices down for its constituency to win the election again.
Okay, well, we'll have to wrap it up there. My expectation is that I think they will extend for 6 months the current cuts, not just for 3, because I don't think they can, once you come back in September, it's too close to the American elections to be tightening markets. So you tighten now for 6, plus you get a bigger bang for your buck. Tightener for 6 months, you get this oil price off the $80 floor where it looks like it wants to head towards, and you have a better chance of settling it a little higher. That would be my little forecast for the weekend. Kate Durian, thank you so much as always here in Dubai. Aman Nasri, we've got the double Dubai. We got the triple Dubai team here today with Mehmet Ogucu, I think sitting in beautiful Turkey by the looks of the wall behind him. That's not a London Energy Forum wall, I would say. Although
that's
there's a few,
country house, yes.
It's your country house, I'm sure it is. And I've seen that view in one of your photos before, and it's quite awesome. So one day we'll get there for a virtual roundtable meeting. Thanks, everybody. Have a great weekend. We've got the great Mike Muller and Christoph Ruhl on Sunday morning as a curtain raiser to the OPEC meeting. So tune in then. All the best. Thank you.
Thank you.